Welcome to Analyzing Finance with Nick. In this video, I'm going to be talking about the path to privatizing social welfare systems and social insurance schemes. As somebody who has thought about this a long time, who both feels the need to have a free market manage things more efficiently, but at the same time does not want any troubled person who's down on their luck to just die on the streets, I've tried to find both a economically efficient yet humane way to take care of the needy in our society. And in this video, I'm really going to be talking about how we could either use public-private partnerships or just outright privatization solutions to a lot of the social welfare systems in the world that are in risk of major financial insolvency. So let's get started. The first thing is that most of the social welfare systems in the West, due to demographic pyramids that do not match the pay-as-you-go revenue schemes for them, are all at major risks of insolvency. Either taxes would have to go up to an unsustainable level, or payouts are likely going to have to get cut if the current model is to continue. However, you can't really do it as a pure for-profit business, except for maybe unemployment insurance. I think could work possibly as a pure for-profit business, and I'll get later why I think that could be the case. But outside of unemployment insurance, I think most social insurance schemes have to come from a non-profit source. And I think also the main problem of the welfare system is that it often incentivizes people to stay on longer than they would otherwise, and it is too impersonal. It doesn't really factor in the individual specific situation of the people who are hard on their luck and what to do to get them back on their feet. Instead, it just says, oh, there are some people who are just in the perma underclass. We need to just take care of them or give them enough comfort so they'll vote the right way. That's not really a viable solution, and it not only threatens the credibility of democracy, but it also is a disservice to these people to help them actually try to advance. And the welfare cliff, which is the idea that the amount of effort to going back to work and earning enough money that your living standard is materially higher than being on welfare, is higher than it's ever been. And so that's another issue, is that people perceive that all the extra effort needed to get off the system is not worth the marginal gain, if not outright loss, of living standards you get from doing so. And then now with automation technology and robots and AI, a lot of people think that the marginal cost of living is going to continue to accelerate faster than the marginal productivity of labor, which means you have more people who are economically useless and they're going to need to be taken care of. I think one way to make a privatization of the welfare state and more viable and have people more independent is by reducing the cost of living, especially in housing. But I've talked about that in many other videos, so I'm going to kind of not talk about how to cutting cost of living is the solution here, and I think that's could be part of it, but instead about how it would work if we were able to privatize social welfare system and what ways we can do it that help generally provide the same kind of benefit to society without the consequences that we have of a government-run system for doing this. I think the best system would be to do something like the equivalent of a modern medieval guild. And there are certain parts of the world, such as in Switzerland, where the guilds still offer this kind of service to their members. But the idea of the guild is basically you have a community that people pay into as a membership for themselves and their descendants. And they pay an upfront fee. The guild invests that money over time. And you can either do it as an upfront thing or you do it as premiums, like an insurance policy, depending on how it's structured. And you have parents pay for their children at birth to be part of this, or adults can choose to enter at a later age. Pricing, I'm not really sure how that would work because I'm not an actuary about the probability of unemployment or other types of catastrophes, but similar to how life insurance is priced based on the probability of death, I think that actuaries can find a way to accurately price the probabilities of an individual given their level of education, given their upbringing, given their skills, etc., age, what their probability of being debilitated out of the workforce is, and price the policy accordingly. And also how much time that they'll have to compound those premiums before tragedy strikes. And so that is what this, so basically how it works. So you pay something in, and then when somehow you lose your job or your livelihood, the guild will come in, they'll house you, they'll feed you, they'll give you enough money to cover your expenses while you're waiting to figure out the next thing to do. And then they, at the same time, the community will help you try to find a job, because unlike a government, a private non-government organization, such as a guild in this example, has the incentive to get you off their payroll as fast as possible, because they lose money every month you're there. And you could also structure it so that they don't rush you at a job at McDonald's or something like that, so that the contract is that you get to stay on the system until you get a job aligned with your equivalent skill level and maybe a higher premium. I think that could be a way to deflect that. That could be one of the negative incentives here. They try to get you any job, but not the right job. And then the other main risk of this is fraud, that a lot of companies will just try to create fake charitable or nonprofit organizations and offer to provide this service. Instead of reinvest the money prudently, they either invest it poorly and lose the money, and so they don't have the assets to cover in a recession when have a disproportionate amount of people need the service, or they just outright steal it. So there need to be strict enforcements to prevent fraud. There has to be limitations on the investment universe so that the pension fund managers in this case, well, not really pension fund, but the social insurance fund managers don't go too far on the risk curve and blow the money. So I know those are the inherent flaws in this, are fraud and poor allocation of capital, but there could be guardrails for that built into this policy. And then once you're back off the system again, then you go back to either paying your monthly premiums, or if you had your family pay at birth, you just go back to living your life. And that would be the alternative to social welfare systems. No, there are no guilds in America, really. There might be some, but I guess in a modern term for a guild is a union. There might be, I'm not sure really how much labor unions do this for their workers. I don't think they do it to this kind of degree as a pure social welfare replacement. I know I've heard the Mormon Church has some sort of social safety net for its troubled members, but I don't know if it's to this degree either. But you can have organizations throughout American society. I'm using America because that's where I live as an example here. That could offer this type of service, and you would make it mandatory for people to contribute to it. So if instead of your payroll taxes going towards one of the government and Social Security, or to unemployment insurance, or to whatever type of percentage of the government budget goes to social safety net policy, you can have it invest in one of these organizations. And you can also have them built as retirement plans too. And they can build pensions as an alternative to Social Security in your community. And the other advantage of doing this at the local community level is you could keep the groups small, but large enough that it's a big enough sample size that they don't go under for too many people being unemployed, but small enough that the people running these organizations can actually personally know the members and understand their circumstances and help them figure out a way to get on their feet that's most compatible with their talents, abilities, and life goals. So like examples of groups that could be this are like churches, for example, could offer this kind of social welfare pension type thing for their parishioners. You could use it for university alumni groups, undergraduate students at that university. It could be used for social clubs, whether it's country clubs or sports clubs or any type of social group, fraternal organizations, women's organizations. And the other possible social bright side of this is it will encourage more people to get involved in their community and join these kinds of organizations. And it's not really a purely religious or secular thing. There'll be something for everybody. And the rule really would be is that people would be mandatory for people to participate in one of these. Therefore, there's a big enough of a pool that not only the people who are most likely to need the service participate, because otherwise you would have a moral hazard problem where only the weakest members of society, relatively speaking, would sign up. Those who are, it's kind of like if health insurance that people would, was the debate against the pre-existing conditions is that it would only people incentivized to sign up for health insurance if they knew they were going to be sick. And so that's why this original solution for Obamacare was to make it mandatory, because that would allow everybody to participate and not without discrimination of pre-existing conditions. And this would be kind of the similar ways that you'd have to have some sort of mandated requirement to participate, because if you didn't, only the people who are socially weak would participate, and either rates would have to be way high for those people and they wouldn't be able to afford it, so nobody would participate, or if they're subsidized in any way, shape, or form, you would have a problem of these organizations going bust or having to be heavily subsidized by the government, which effectively would be government welfare, because you don't have enough of the more productive members of society participating. That is another potential risk factor here. I think this could work for things like long-term medical care as an alternative to Medicare. This could work as an alternative to Social Security if there's a retirement management, especially if you think that private sector money managers can do a better job than the Social Security Trust. And it could serve as an alternative just for classical social welfare, or somebody's down on their luck and needs to be taken care of. The other thing that could be done on this is like outright privatizing unemployment insurance and make it so that it is a benefit paid for by employers. Kind of like how health insurance is a benefit now that a lot of companies offer their employees because they want it more. They do the tax treatment of offering health insurance as a benefit. Paying that much in health insurance is worth more to the employee than the same additional boost in salary. And you can have a similar incentive structure that employers offer for health insurance to have employers offer unemployment insurance. And they can offer unemployment insurance that's way higher than the current one, and the unemployment insurance companies will have incentives to get people off of it as fast as they can, because their profit loss is determined on the probability of people getting unemployed and finding jobs quickly. Whereas on the government one, the government really has no incentive to get people off of the unemployment insurance. And you could also, to avoid the rush people into McDonald's problem, you can have a slightly higher premiums that people could pay in exchange for maintaining the same salary at their job until they find a job of equal skill or compensation. So there's ways you can structure the incentives here to not allow for risk of kind of defrauding or moral hazard, which is one thing I'm very consistent with my views on policy is really I'm just trying to minimize moral hazard with any of this kind of policy solutions. The other thing that can be done outside of these guild-like system that I mentioned in terms of privatizing the social insurance is having more direct contribution and accountability of families towards struggling family members. I think a lot of critique from social conservatives is that people are not as family oriented as they used to be, and they're not willing to take care of their weaker family members. But from an economics perspective, when you have taxes that overwhelmingly go to paying for social services that eat up anywhere from 10 to 50% of working professionals' incomes, depending on what tax bracket you're in, if that much money going to pay for that stuff through the government, people don't have as much money to be generous and help others than they would otherwise, like such as a struggling family member. They simply cannot afford it, or they don't feel like they should be able because, hey, wait, I'm paying all this tax money to the government, leave it to them. So whether it's just a mental outsourcing or just financial restrictions due to higher taxation to cover social services. I think that has been a big disincentivizing for helping people locally in your own community and your own family. And so instead of just paying these high taxes and having the government take care of these people and having a big intermediary bureaucracy needed to cover all of this and do it in a way that's very cost inefficient, there is a better solution out there, and that is simply to allow individuals and businesses to write off the expense of taking care of weaker members of their family or in their communities off their taxes. So say, for example, you are a successful husband and wife who make $500,000 a year combined. You have 3 adult children. 2 of them are doing well in their jobs, and one is kind of struggling, not able to do well in school, and is having a hard time getting established. You probably should just care about him anyway, or it could be a cousin or a nephew too. Which probably makes it more believable, because I think most parents would take care of the struggling son or daughter without tax incentives. But the point is, you have a struggling family member and you want to be able to take care of them, but you just don't have the financial means to do it because of taxes. So what if you can just, every dollar that is spent directly taking care of your struggling family members can be swapped out of your tax bill? So it's not like the average high earning person is going to pay less money to help people than they would otherwise. It's just they can, instead of choosing to send that to the government to do it, they can allocate that money to directly take care of people they know personally, and probably do it in a way that's, one, more cost efficient than doing it just through the state, and 2, probably more personalized and more likely to result in approved outcome, because the people who are helping the struggling family member have a lot more emotional skin in the game. They want to see this person succeed, and they know them better to figure out what they actually need to improve their situation, or at least be taken care of in a way that will prevent them from being a liability to society. If it's like somebody who's like physically or mentally disabled, the government would lose tax revenue in this, but they'd probably save more in tax dollars avoided being spent to take care of these people who are otherwise being taken care of by people closer to them in their lives. That's some random social worker who may or may not care about them to the same degree as people in their own community. Like I see as an example, I'm going to talk about this in the video, homeless. I wonder how many of these homeless people have families, whether it's siblings or parents or other more distant relatives, who know that they're in that situation, but just cannot afford to take care of them, or are unwilling to because of the financial expense it would have to do. If you made it so that it was using the tax code to make that more financially viable to take care of those people, then I think it would result in a more moral society, a more financially efficient society, and a more productive economy. The main risk for this is fraud, just like the guild system. The risk of, like, say, like a parent using this on one of their children who's just simply lazy, or who is productive, and they make up some story that they need help. I think businesses could also offer this, like major companies, but they would be required to only do it in the city of their headquarters, of their United States headquarters. So, like, say for example, if Starbucks wanted to fight the homeless program, and if they could write off all their income tax in exchange of taking care of the homeless in Seattle, I think, would that be such a bad thing? Probably the homeless in Seattle would be in better condition than if the local municipal government or the federal government had to take care of it. And Starbucks gets tax savings, and society gets a company like Starbucks being willing to take care of the people in need. I'm just using Starbucks as an example. I don't know what they're actually doing to help homeless people in Seattle, but this is just a hypothetical. But the general idea, the main risk also is companies use this and to try to cheat the system of paying less tax than they should. So you would have to have some sort of regulatory organization to ensure these aid programs are being used correctly. But I still think overall it would be a more cheaper, a more effective, and probably a more just form of taking care of the needy of society than we have now. And again, this is just kind of a idea that's been on my mind. I'm not a social policy expert, a sociologist, or a welfare economist. But if any of you guys watching are and would like to contribute to the conversation, or if you just have an opinion of what some potential holes in this system of privatization, or have any ideas that could improve it, I would love to see it in the comments. If you like more of this content, feel free to like and subscribe and share. Thank you for watching.